Okay, what if I told you there's a financial market out there that's so massive it makes every stock market on the planet look, well, kind of small? Today, we are diving headfirst into that giant, the foreign exchange market. You've probably heard of it as Forex. We're going to break down what it is, how it all works, and the absolutely crucial things you need to know. So, to really get a picture of the scale we're talking about, just look at this number, $9.6 trillion. That's not the total value, that's the average amount of money traded on the Forex market every single day. It's a number so big, it's almost impossible to wrap your head around, and it just completely dwarfs all the world's stock markets combined. And this right here really puts that huge number into perspective. We're talking volume, liquidity, value. You name the metric, Forex is the undisputed champion. This isn't just some abstract market for traders, It's the fundamental engine that powers our entire global economy. It's what lets companies do business overseas, and it's what makes it possible for you to travel to another country. All right, so we've established it's huge, mind-bogglingly huge. But how does it actually work? How are all those trillions of dollars flying around the globe every day? Let's break down the most basic, core idea of what a Forex trade really is. Okay, the very first thing you've got to get your head around is this. In Forex, you never just buy euros or sell dollars on their own. You are always trading one currency for another. And this is done using something called a currency pair. You can almost think of it as a constant financial tug-of-war between two different economies. So, how do you even read one of these things? It's actually way simpler than it looks. Let's take GBP/USD. That's the British pound versus the US dollar. The first currency, the pound, is called the base. That's the thing you're actually buying or selling. The second currency, the dollar, is the quote. That's simply the price. So if you see GBP/USD is at 1.25, it just means that one British pound costs you $1.25 US cents. Easy, right? So let's see how this plays out in a real trade. This is how a trader can actually make a profit from these little price movements. Say a trader thinks the euro is about to get stronger against the dollar. They buy 10,000 euros when the rate is 1.12. And hey, their guess pays off. The rate climbs up to 1.13. They sell those euros back, and that tiny shift in the exchange rate just made them a $100 profit. And that, in a nutshell, is the game. Buy low, sell high. All right, now, like any specialized field, Forex has its own lingo, its own jargon. And if you want to understand what's really going on, you absolutely have to know a few key terms. So let's decode some of the big ones. First up is leverage, and this concept is a huge deal in Forex. Basically, it lets a trader control a really big position with only a small amount of their own cash. Think of it like a financial superpower, an amplifier for your money. But here's the catch, and trust me, it is a big one. It amplifies everything. It makes your potential gains much bigger, but it also magnifies your potential losses just as much, if not more. Next up, we have the pip. Yeah, it sounds a little funny, I know, but it's just the smallest possible unit of measurement in the Forex market. When you see a price quote like EUR/USD at 1.1200 tick up to 1.1201, that's a 1 pip move. It's basically how traders measure their wins and losses, right down to the tiniest fraction. And finally, let's talk about the spread. You know when you go to an exchange booth at the airport and they have two different prices, one to buy and one to sell? That's basically the spread. That small difference between the buy price and the sell price is how the broker makes their money. And this is super important. Because of that spread, every single trade you make starts off slightly in the red. It's the cost of doing business. So we've covered the what and the how, but who's actually in this market? Who are the players moving these trillions of dollars around every single day? Whoa. Okay, this chart right here tells a huge story. Just look at that tiny little sliver. Only about 2.5% of that massive daily volume comes from what we call retail traders. That's everyday people like you and me, trading from our laptops. The other 97.5%? That's the big leagues, giant banks, hedge funds, multinational corporations. They're the whales in this ocean. And retail traders? Well, we're the minnows. And where is all this action taking place? Well, geographically, the market is really concentrated in just a few spots. London is still the undisputed king, handling a colossal 38% of all trades. New York is a strong second, and Singapore has just skyrocketed to take the number 3 spot. Together, these 3 cities are basically the command centers for almost all the world's currency trading. Okay, let's circle back to that tiny 2.5% slice of the pie, the retail traders.
we need to have a serious talk about the risks. Because while you hear all about the big potential wins, the potential for loss is huge, and it's very, very real.
Let's just pause on this for a second. Think about it. Around 80% of everyday people who try this end up losing money. That's not a guess. That's what the big financial regulators consistently report. It's a sobering statistic, and it really shows you just how incredibly challenging and high risk this whole thing is for the average person. And it's not just the market itself you have to worry about. Unfortunately, a market this big attracts a lot of scammers. You have got to keep your eyes peeled for these classic red flags. Anyone promising guaranteed high profits, so-called advisors who aren't legit, or any kind of high-pressure sales tactic that pushes you to deposit money right now. So what can you do? How do you protect yourself? It really boils down to a few simple but absolutely crucial steps. First, always check if a broker is registered with a real financial authority. And look, if someone promises you guaranteed high returns with little or no risk, run. Just run. It doesn't exist. Real trading is risky, period. Anyone who tells you otherwise is not being straight with you. Just take your time and do your homework. And all of this brings us back to the big question, right? The Forex market is, without a doubt, a pillar of the global economy. It's a place of incredible scale and movement. But for the individual person, the retail trader, it's also an incredibly high-risk arena where most people, frankly, don't succeed. So is this giant world of Forex an amazing opportunity, or is it a financial hazard that most people should stay far, far away from? The answer probably depends on education,